Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, June 25th, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Before I forget, I wanted to show that we have developed my indicators for MetaTrader. So these lines are now available for MetaTrader, which is like super awesome. So if you trade using MetaTrader 5.0, they are available. I will post a link in a few, but the important thing is they actually work and they are available. So do sign up for that if you're interested. Today we have a pretty interesting, again, but relatively short presentation. S&P 500 is again at new records. I think the short squeeze will continue, and I'll explain what that means. In other words, new highs will be made. Junk debt, the high yield bonds, are also making new records. This is great news for stocks. We'll look at a recent trade example for Nike and how we should especially ignore everything, especially the earnings reports, and just trade. Natural gas is breaking to new 52-week highs. I think this is going to continue higher again. This could be a sizable move higher. Dollar is looking extremely promising, and this should dollar continue higher, gold will most likely collapse. We'll look at that. So as I recorded, I'll show you Bitcoin, Ethereum, and especially Dogecoin. It's most likely all of these guys are just gonna unravel, and some of them will go to zero. And I'm getting a lot of flack for this, especially with Dogecoin. I don't know why, but people get attached to it, and one day soon, hopefully, I'll have a separate email or a separate video about how not to get attached to, emotions when trading. And also I have two newsletters that are paid. So one is called Elite newsletter, one is called Speculator newsletter. So for the Elite, we cover mostly, large caps and ETFs. So I'm going to cover all of these stocks in a separate paid video. And if you need to sign up, sign up. And for the Speculator newsletter, you can see we have some weird looking names and some interesting setups, so they're also going to be covered separately. All right, let's get right to it. So S&P 500 is again at record highs. So new record highs were set right there on the 24th of June yesterday and Thursday, and today again we saw a new record. So a short squeeze, meaning that, so let's pretend that we are bearish. And we were bearish right there where I'm hovering on 18th of June 2021 this year, and we're like, okay, we're going to sell it short. So we're going to place a bearish bet, in other words. And where do we place our stop? We place our stop above the recent highs. And where are the recent highs? So the recent highs were right there on the 15th of June. So we would have placed our stop above the recent highs, but now yesterday and on June 24th the new highs were made, so we were like, okay, so we were wrong, so we need to cover our short. And what does that mean? We need to cover our short means that we need to buy on an open market. So so when we buy to cover our short position, we buy, and this pushes the prices even higher. So this is called a short squeeze. It will most likely continue for some time. We don't know when it will end, but it will most likely continue, for a while longer. So once again, this is the indicators you see on this chart, this green, blue, red, and yellow line, are available for you at MasterChartsTrading.com. You can also look in the description of the this video and find me there. So these lines, basically this is all I use. You can see that on this chart, there is nothing else. There is no volume, there is no momentum indicators like RSI or MACD. And because this is all you really truly need, you just need to kind of have a reference point of whether or not you should be even thinking about buying, or whether or not you should be thinking about, selling short. So in this case, clearly the breakout occurred right there on April 29th of last year, and since then we were not really thinking about selling short. To sell short, we would have needed something like this to happen. You can see, I'm going to zoom into the pandemic announcement. So there's the pandemic announcement, or around that area. February 25th is where we would have exited. March 13th is when we had the pandemic announcement right there. So we were actually quite close to the bottom by then. We exited a while back before that. So this would have been, and what I'm hovering right now on 9th of March of last year, right there, this would have been my signal that yes, we have entered the bear market. And now we need maybe a small bounce towards the red line and to sell it short. So this is what I'm looking for right there. This is the arrow where I would have sold it short on 27th of March. But I didn't. And the reason being is because occasionally I listen to the news. And in this case, I also was looking at junk bonds, to which I'll get to in a second. And I figured, I don't think there's going to be another move lower. This was even though the system says go ahead and sell short, I overrode the system and said, okay, I don't want to sell short. I want to just do nothing. So we did nothing from February 25th, 2020 until right there on the April 29th, 2020. So in this period we did nothing, then we started buying. And when we buy, we need to have a good opportunity. When I say we started buying, we didn't start buying up here or up there. We bought around this blue support resistance line, because at this point the risk is quite low. But if you're buying way up there, where are you going to put your stop? See, for me, the stop is a trend change. So when I buy, I'm looking for a trend change for me to be stopped out. I don't want to be stopped out prematurely. So the trend change here on April 29th, 2020 would have been this yellow line. But you see, let's say here on September 3rd, 2020, your trend change would have been at the yellow line as well, which is way down there. Do you see how huge the risk would have been? So what we did nothing. We were just sitting in our position from the April of 2020 breakout. And if you have 401ks, this is all you do. You buy, retirement accounts, you buy them around the blue support resistance line, and you just trail it higher. Where do you trail? You trail at the blue support resistance line. And you would have been super correct. See, it's best to do nothing. And it's, again, new records. So if you have retirement accounts, you're trailing at the blue line, and you're doing nothing. Here's NASDAQ QQQ. It broke out a little bit earlier than S&P 500 just recently. So whereas S&P 500 made a new record just yesterday on 24th of June, NASDAQ actually made the record right there on the 14th of June. And at that point I'm like, there is no way that NASDAQ will make a new record, but S&P won't. Why? Well, we need to look at what's called correlation, one of my favorite indicators. Notice I don't really use any momentum stuff. I just use things like correlation. I don't trade using this indicator. This is just for, it shows you what's going on. And here what I'm showing you is this. It is overwhelmingly positive, vast majority of the time. When NASDAQ makes a new high, S&P will follow. When NASDAQ moves up, S&P moves up. When NASDAQ moves down, S&P also moves down. So there was a small, right there in the beginning of May of this year, there was a small dip into negative territory. We sort of just did nothing about it and just kind of kept our course, because by and large, when one moves, it moves the same way. The other ones move the same way. So again, we're looking at a short squeeze to continue. So in other words, as I just described, when a new record is made, traders that bet on the continuation of this, traders that bet that this stock would continue lower were wrong, and they get stopped out. Stopping out means they need to buy. And so they're buying, and this is again pushing the prices even higher. So this is like it's just going to continue for a while, most likely. Small caps are very, very close to new records. There's the new record on the 15th of March 2021 this year, but we're so close. And again, if we look at the correlations, they're enormous. So don't think that when S&P makes a new record and small caps doesn't, that actually means anything. It means something in extremely rare cases. By and large, it means nothing, and we should be looking to continue buying. Again, where do you buy? You buy at the blue line. So there's an opportunity. Last opportunity was in September of last year for this particular security, IWM. But believe me, there are literally hundreds of opportunities every day that I receive using our stock scanner. So I'm looking for stocks that do this. They would come down towards the blue line, touch it, and close above it. And I literally get like hundreds of those a day from the United States markets. So yeah, you won't be able to buy this particular small caps ETF, but there may be dozens of other securities like stocks and some ETFs as well you can still buy. So again, don't limit yourself, basically. And another thing is, as I said, correlations are very large, so we need to look at the larger picture and avoid getting bogged down in the minutia. For example, that maybe this is a divergence. The S&P is making a new high, but the small caps are not. So no, it's not a divergence, not a big deal. This is a big deal. This is junk bonds. So junk bonds and stocks, once again, I'm going to turn on the correlation coefficient. Surprisingly, right? This is bonds, but they are high yield bonds. So they are more like stocks. So again, notice how much they correlate. They correlate enormously. Vast majority of the time, they are doing the same thing as the S&P 500 is doing. This is a correlation to the S&P 500. Knowing this, we can make an educated guess that if one makes a high, most likely the other one will follow. In this case, when the junk bonds made a new record, a new 52 high here on the 11th of June, it was really good news for me, because not only it confirmed the correlation, it also confirmed the validity of the bull market for stocks. Okay, so it's kind of like a correlation and also confirmation. So right now we're again squeezing out all those short positions and continue higher. So I wanted to show the reason why I did not sell short the S&P 500 back in April of last year. Notice where the breakout for junk bonds, and look at this enormous gap. So this happened when Federal Reserve began buying junk bonds, okay, on the 13th of April of last year, whereas the S&P broke out on 29th of April, junk bonds broke out earlier. So knowing these two things, knowing the correlations, they're high correlation, I made the decision not to sell short the S&P 500. All right, so now I wanted to show a recent trade. Here's Nike, and why you should avoid looking at things like earnings. Oh, excuse me. So I'm going to turn on the earnings reports. There are show earnings reports on chart, and there are the earnings reports, and I'm going to look at the latest one. So the latest report was really blockbuster. Surprise was 81%. So one would say, but Alex, it's great that the earnings are great, so that means this is the reason why this thing gapped up. I'm not going to argue with that. It does look like it gapped up after the earnings report. However, let's look at another earnings report. let's say this one here. On this one, on September 22nd, the earnings were actually even better. The surprise was 100%. But the gap up was relatively meager, right? And it was already in an uptrend. So can you correlate earnings reports with action in the stock market? Absolutely not. Don't bother. And actually, this is really, really dangerous. People do this all the time. They're making this huge mistake. They think that they can correlate fundamental analysis somehow to the price action of the stock. Nothing can be further from the truth. Absolutely not. Don't do it. It's very dangerous to do that. You need to look at the price action in vacuum, in isolation from the earnings. Okay, if you want to look at the earnings, that's fine, but just don't contaminate your knowledge of earnings with attempts to trade the stock. Okay, because you will most likely fail. Here's earnings reports that were horribly negative. Look at this. Minus 672% surprise. What happened on this day? Nothing. Like literally nothing happened. Okay. Again, our breakout for this particular stock, Nike, was back in April of last year. This was the latest opportunity. Actually, the latest opportunity was just recent, but this was the opportunity back then. Did we base our thinking of earnings reports? No, absolutely not. They're useless. Again, please listen to me. Right now, this was the actual alert. Okay, so when I trade, I turn this off. So now I don't even know when the report is going to come out. Okay, much less I know about who is the president, who is the CEO, who owns this thing, which company, which hedge fund does this thing or what other thing. It's not useful. In fact, it's counterproductive, because if you start worrying about the things that I just named, you will be paralyzed. And when this opportunity happens, like it happened right there on the 18th, 21st of June, and I send this to my subscribers, and I'm like, okay, we need to be buying this. This is called pulling the trigger. Can you pull the trigger when the opportunity arises? And if you have those other extraneous information, like just named about the earnings reports, etc., you will be paralyzed because you will be not sure, you see. And here you just need to do one thing. Do you want to buy it or do nothing? In this particular case, I said, yes, let's buy it. Because this is all I need to know. We need to see the stock come down towards support resistance, if this was already in an uptrend. If it was breaking out, like for example here back in April, it needs to close above the blue support resistance line right there on 17th of April. But right now, it was already way above that. So above the support resistance blue line. So it needs to come down towards it and close above it. It did exactly that. We pulled the trigger. This is already 20%, almost 20% gain in just a few days, knowing nothing. Okay? This is 100% technical trading. You need to know nothing. In fact, I would highly discourage you from learning stuff about stocks, like earnings reports and who is the CEO, if you really want to make money. So this is the way to make money, know nothing. All right, moving on to natural gas. And there is no earnings report for natural gas, is there? But they would say, but isn't there like a shortage because of the heat wave? Okay, so that's another ridiculous thing to say. I don't see any temperature graphs on this thing. Why was it back here in November, December? Why was it breaking out here? Nobody really knows. Okay, so once again, please, if you just want to trade and make money, ignore everything. Okay, you'll do just fine. So latest opportunity once again is when the stock came down towards the blue support resistance line and closed above it, and it happened right there on the 16th of April. It was above it already I decided to let this particular one go on 10th of March. Again, this is purely from reading of the candlesticks. I just didn't really like this action. I was correct, so we waited a little bit. I sent an alert right there on 16th of April. It exploded almost immediately, and now it's breaking even higher. So this pattern I wanted to show, this looks like a W. I already highlighted this pattern, and it's now breaking above this W. So this W pattern is a very, very bullish pattern. This is old style kind of thinking where you look at actual chart patterns. I never look at chart patterns when I trade. I only look at these lines. So I wouldn't be. Some people would say, okay, so when it breaks out above this W pattern, it's kind of like this huge cup and handle. Maybe this is a cup and this is a huge handle, and there's the breakout. So some people would actually buy on this breakout, and I would say, no, don't do that, because once again, where is your risk? Your risk is huge. Where would you put your stop? Some people would put a very tight stop, and vast majority of the time they'll get stopped out. My stop when we trade things like futures or continuous instruments, not stocks. When we trade stocks, we put it at the yellow line. But when we trade things like futures, commodities, we put it at the red line. So you see how far away the stop would have been? It's enormous. It's not useful. So we were buying it back here in April, and our stop would have been a lot smaller. This is our stop. See how small our stop is? So some people actually ask me, but Alex, isn't it, you just showed me that the depth of this pattern is 30%. So should we be buying up here with the hope of it going 30% higher? It's not impossible, but the risk is large. So I would not recommend doing it. I would only recommend buying it when there is a low risk. And the low risk is when it's around this blue support resistance line. So we're looking at a pretty sizable move higher for natural gas, possibly. Okay, looking at dollar index DXY. So January 6th insurrection low, and then kind of slowly we started building this, what some people would describe as base. So we have a higher low on 26th of February, another higher low on 25th of May, and now a move higher. So now we're moving not only higher, we actually closed above the strong resistance where I'm hovering on the 18th of June, last Friday. And what's really nice is that on the 21st of June, on Monday of this week, we had strong selling. So if I was again blindly following my lines, a robot would have sold it right there, shorted it right there, where it would have put a stop above the blue support resistance. Okay, I didn't do it. Okay, again, because there is a good possibility we're actually about to break into a bull market. So for that, I'm going to show you, I'm going to turn on the future projection. This is 6.0 version of my indicators. You can see that the indicator lines are curving down together lower. So the risk is, or the bullish levels are actually quite close. And additionally, this action, so if let's say you sold it short right there on 21st of June, you can see that there is a hammer-like candlestick on 23rd of June, another hammer-like candlestick today. So hammer-like candlesticks show that buyers are coming in. Hammer means that there's a, kind of looks like a hammer right there. So what I'm seeing here is I'm seeing, even though the signal to sell short was there was no follow through so far. So I'm expecting actually Monday there could be a gap up. There's a good possibility we're going to see a gap up. So what does that mean as far as, as far as what are we trading? So you can't really trade the dollar. You can trade, various forex instruments. I do trade the gold. So since gold is traded in dollars, let's look at gold. Here's XAU USD gold versus US dollar. So again, this is a currency pair where I'm hovering XAU divided by US dollar. So the way to think about trading currency pairs, think about it this way. If the lower part of the equation, US dollar, is getting bigger, it will pull this currency pair lower. So this is exactly what's happening. Dollar is gaining ground and it's pulling this currency pair lower. The gold is in a bear market, actually entered bear market on the 8th of March, right there where I'm hovering. It's just taken a really long time for it to finally unravel. Now this pattern, again, this is from classic kind of patterns. So this is a, I don't know, inverted flag or something of that nature. So we have a big move down on the 16th of June, 17th of June, and now we have the slight move higher and just like basically sideways. This is quite bearish. It's possible that we may move a little bit higher. In fact, I'm hoping for it because I want to get into a short position right around the red line. So if it does move a little bit higher, I want to short it like around 1826. But actually it may never happen. So again, from the classical kind of perspective, we're looking at depth of this bulge. So that's 8%, easily 8% down. So we're looking at, you know, around 1500 right there. And that's just the beginning. If the dollar continues higher, here's dollar. Dollar could be in for a huge bull run. Could continue significantly higher. So if I'm correct, dollar will continue higher, gold will collapse. I'm just hoping to get in on the short side. All right, and now let's wrap up with various crypto instruments. So Bitcoin is, notice where it's really trying to hold the support level. Notice how many times it already hit it. So these lines are not drawn by hand. These are calculated. You see, these are actual indicators. Notice how many times it hit the level. 19th of March, May. There's another touch right there on 8th of June, 21st of June. It really blew right through it on the 22nd of June, but I need to see a close below it. And today it was so close. Look at this. It's basically there, almost there. So most likely tomorrow or Sunday, this thing is 24 hours a day, we most likely will see a close below the support resistance. Once that happens, we can see it just could unravel like that. It could just drop to, you know, $20,000 level in a couple of days. That's 35% down, easily. In fact, this is Ethereum, and Ethereum just entered the bear market. So we can safely say that Ethereum is now in a bear market. So what does that mean? Bear market means we're going to be making lower lows and lower highs. We're no longer going to be making higher highs and higher lows. We were doing just that, and we had no problem buying it. This is an actual alert. 28th of February. I traded it myself. I bought it a while back right there. This was my position on 24th of September. I closed it out. I should have stayed in, obviously, but you never know. So once again, I'm not married. I'm not opposed to whatever instrument I'm trading. I'm not gonna, impose my will onto this instrument. I will look objectively at it, and looking objectively at it, it's in a bear market right now. So Ethereum is in a bear market. We can expect lower lows. Most likely Bitcoin will do the same over the weekend. It just hasn't. Let me see if it was. Sometimes others see Bitcoin versus USDT on Binance. No, not yet. Okay, so again, very, very close, but super, super close. So we're looking at collapse pretty soon, I think. And finally, this thing that for some reason everybody wants to know about is this Dogecoin. I got a ton of flack for it. I don't know why. People are so attached to it. They're so emotional. look, guys, if you want to make money in the stock market or whatever crypto market, you just cannot be emotional about this. This is completely they're just numbers. There are numbers on the screen with colored sticks. So looking objectively at this thing, it's in a bear market. You see, it's below this red support resistance line. So it's in a bear market. And now, yes, it rallied like 25% in 3 days. It's testing resistance. So today, 25th of June, see how it came up above the red line and closed below it? This is actually a signal. Okay, so if I had a what do you call it, a margin account, I would have sold it short already. So Dogecoin, Ethereum, probably Bitcoin very soon are all really about to collapse. So you need to, like, if you really own some of this stuff, you need to really think about your exit strategy, because once it gets to zero, it's really difficult to exit. And I have a feeling this, specifically this Dogecoin, will go to zero. Yeah, so if you have any comments, please make it below, all right? But if you are ready to sign up, head over to MasterChartsTrading.com, click on products. So I have 3 basic products. I have trading indicators, these lines in the chart, which are super useful. Just ask any of my subscribers, they make huge amounts of money, okay? If you want indicators and my newsletter, so once again, if I have 2 newsletters that are included in the subscription. I have an elite newsletter, I have a speculator newsletter. We trade all of this stuff. I send out alerts, I send out annotated charts. So like, for example, this Nike was the actual alert, and it was sent out as an annotated chart, and there was a risk control right on the chart as well. So in other words, how many shares are you going to be buying for a sample account? Now I have an ultimate bundle, which has a really super cool product called Stock Screener. So we're looking for stocks that are breaking out, for example, or stocks that are touching the blue line and rallying above it. So literally hundreds of them a day. And this is a type of things we get. So you can see how many alerts per day, hundreds sometimes alerts per day. So you really need to screen what you're looking to buy. My favorite list, again, is this, all stocks with options. Really a great list. And notice how many per day I get, 138, over 100 alerts per day. So I need to really screen what I'm buying and stuff of that nature. And you can see that we have multiple very interesting stocks that we're trading. And also now I have gotten into teaching as well. So if you really don't understand something, you need help, especially with kind of wrapping your mind. This is difficult to wrap your, if you're just never done this before, it will be difficult for you to wrap your mind around how to kind of do this without knowing anything about earnings, without knowing anything about the company. You can completely make this blank. It makes no difference, okay? And so this is the kind of thing where the Trading Academy comes in. And you can, if you have, limited funds, some people say that, but Alex, your indicators are $30 per month. That's so expensive. For some people, that is truly expensive. So I won't turn away anyone, and I have sliding scale right now. So if you are interested in learning, you're truly there, and you really want to learn, send me a message, okay? And I will work with you, and we will work out a good sliding scale pricing where you will get this bundle right here, indicators and newsletters, without the stock screener. And you will get at the sliding scale pricing, but you just kind of need to be ready to learn, basically. All right, as always, I went over. I'm trying to make it under 20 minutes, but now it's 34 minutes already. All right, so if you have any questions, again, let me know. Thanks for watching and have another great trading week. Bye-bye.